traders, the Aussie Swissy. Okay, this is a 15-minute chart. This is traded bearish here, and I'm kind of planning a trade for into the New York Open. What I really want to see with this, and I'll explain what I've got drawn here. I thought it'd be better to draw this, to mark it up, and then explain it. So here's the thing. That might be a long shot, right? It could possibly be a long shot. What I'm wanting to see is this. This is a bearish candle, and the spike. This is the open, the daily. It opens here. Well, there. All right. This is the open, New York midnight. So this is the beginning of our trading day. Beginning of our trading day. So what I want to see is this run on liquidity here. And I mean, we've had a little bit of a thing through here, but nothing significant. And let me just delete a couple of things, back all that off. So I'm wanting to see into the Asia close, right? So this is the London Open here. Grab my pencil. The orange line is the Asia close. I really want to see this push up into the Asia close and give us a high of the day, setting up this run on liquidity. And then I'm hoping that we'll see a lower high into the New York Open or into the New York session. In which case my entry will be after the New York Open kicks off. All right, so I want to see a high and then a lower high into New York, and I want to see it trending down. So that could be a play, because I don't want to get involved here. See the blue line. Let me just explain something here. There's a couple of things about this that I think are really important. Number one is this thin candle back here. We've also got this one as well. But this is one-sided trading. This is a bearish imbalance. And I really want to see it pull back, looking to rebalance. So I want it to touch this level and then break structure to the downside after that. That's, I guess, what I'm getting at. And the other thing, you want to note, this is a high, this is a low. All right, we're looking at a Fibonacci. Grab the fib. Fibonacci, swing high, swing low. Let me just extend that right. Extend lines right. Done. And go OK. See this level here. That's equilibrium. This is the price range. This is the swing. This is the range, a trading range. All right, and equilibrium is the 50% of this previous range. I want to see it trade back into equilibrium. So that coincides with this imbalance if it trades a little bit further than that, right? So we've got the 50% of the fib to 61.8, retrace. That's my happy zone right here for an entry. So I'm wanting to see this pull back into here. But more importantly, I want to see it touch this imbalance. And then at that point, start to break structure bearish, and then I'm looking for a sell. If this happens to hold here and it trades without me and leaves me behind, fair enough, I'll let it go. But yeah, I might even still look for something into the New York. But this imbalance has got me concerned. I don't want to be shorting it, let's say, down, well, here, let's just say we're going with this breakout with a tight stop, and it decides, it wants to hit these stops up here for a bit of a liquidity run, right? So I don't want to do that. I'm preferring to see the pullback and then a break of structure bearish if we get that, and then the opportunity there. I hope that makes a lot of sense, guys. So look, that's the plan on the Swiss yen. It's in a really nice downtrend. Now we've got this break with speed. We've got the imbalance. We've got the look, there's another imbalance here on the 15-minute time frame, right there. So we've got the displacement, bearish displacement. Now I just want to see the pullback into these levels for an opportunity. I would love to hear your thoughts on this, guys, so definitely leave a comment below. That's the plan with the Aussie Swiss. Let's see how we go. Hope you have a great day, safe trading, and we'll see you in the next one.